too, okay?
Okay, I'm long this pound yen. We've got UK inflation tomorrow, and let me just remind myself. So on the diary, in fact, let's show the diary. Here's the calendar. So tomorrow we have inflation, expecting 1.7 against 1.6. And then we have on Wednesday, we've got UK rates. Oh no, we haven't got votes. And retail sales expected to be 0.4 against 0.1. So over the next couple of days, we're allegedly going to get some good UK data, and there's very little US data due out. In fact, we've got next to nothing tomorrow apart from speakers later in the session. In fact, we've had no data today in the US. Very, very quiet week. And Thursday we have weekly jobs. And Friday, that's about new home sales. So we are really thin on the ground this week, with the exception of a couple of bits of UK data. So I bought this. I bought in at 170.28 on a daily S1 pivot. So I'm just slightly above water. This is a 4 hour on the left and daily on the right. So I'm just going to see if that holds. If you look at the daily, we're in this big box with a little dip underneath in March. Otherwise, we've been capped by 173.50 so far. What I'm looking at is my target is that monthly M1, and if we break through that, obviously I will. I was scaling in and out of that as it's a relatively quiet week. I don't want to get overloaded one way or the other, but I think I like the way we're holding the S1, and I think we can go to the monthly S1. It's on the pound yen and the pound US. So that's been holding this huge trend line. So we had a touch in. I picked this trend line off the lows in early April, late March, early Feb, early March, early April, and last week mid-May. So all of those touches, but we are getting a sort of funnel effect as we close in on that monthly R1, and we got resistance up there at 169. But I do think that could get a bit of a leg up. The dollar's very weak still, and on the 4 hour chart we are holding. The only thing we have above us on the 4 hour in terms of moving averages is the 50 EMA. So we're squeezed. We've got the 8 and 21 below us and the 50 above us on the 4 hour. So I'm looking to see if that pound yen can do it. I'm looking for a little bit of a bounce in this euro yen before I get short. So I'm looking for a little bounce to the upside in the first part of the week, and then a rotation back to the short selling in the second half of the week. And so what I'd like to do is I'd like to short 140 on the euro yen, the trap between fibs and the 50 and the 200 on the daily. We've got divergent on the 4 hour, so we do look as if we are capable of some sort of move up. And on the big picture fibs, well, we're just hitting the lows of February 27 at the moment. We've breached the lows at Feb 27. Divergent RSI, so potentially going to get some sort of move up. So happy to buy the pound yen down here and looking to short the euro yen later in the week. That's my main forex strategy at the moment. Keeping an eye on the pound Aussie. I've actually missed a move here. It came off the bottom of the fib zone here and has moved up. Well, we breached the fib zone by 36 points. And currently hitting that 50%. That's a nice potential W pattern there. We start getting some good data tomorrow, so follow through on into Wednesday, and that could see that potentially up here at these R1s and R2s, but we'll see. So I feel as if I should be in that, and I'm not. I'll tell you why I'm not, because I waited for a deeper pullback on, I think it was this Thursday, Friday. I didn't get one. They held 179.30 and I wanted about 179. So I'm going to have to work out a way of getting in that tomorrow if necessary. Because I think that's got the potential, and that's a lovely move off in January, or from November into end of January. Huge move. We had this little area here, and once we broke out of that, we broke really well. Notice how, so we had major support down here at 166.50, and then start a little hammer down there at 166.35, and then up we went. This is where getting in a contract can really pay. You can do very little work for quite a lot of money on this one. If there's some sort of knee-jerk reaction and that went down to 179, I will be a buyer. 179. Otherwise, I think the euro is due a bigger bounce here. I think the euro could do 137.37, 77. Let me mark that. Before that starts to rotate back to the downtrend. Over the coming, well, if they do take action on June 5th, we could see that break 136.50 and drop all the way down to S3. So I think the short, if you time that short well, I think you could get rewarded quite handsomely. So that's the main forex pairs. This Swissy yen has moved quite well. That's due a bounce now, I think. I missed that one, which is a shame because that's worked really well. So it's almost not quite a retest of that star when we failed there on the 8th. Okay, let's now look at the indices. And I said in the weekend video I was interested in getting short. These are the two areas I'm interested in getting short. I hope they get up as far as here. The 1 hour is building at the moment, but I would like to get short at the 580 area or 620 if that can push up. We've got a nice pattern underneath here. A lot of support. I just want to get into the sell zone up there. If we look at the 1 hour chart, this is where I've got the fibs on at the moment. And there's the arrows I've identified for short setups based on the fibs on last week's price action. So 565 or 600 is a potential area for that. This is what we did last week. We kicked off last week. We had 2 days up at the highs, and then they dragged it down, then they sold it. And that, so it was they kissed, so broke the trend line, kissed it, and then dragged it right the way down. If they do something similar again, so we're already hitting resistance levels up there at the moment.
Mike, what do you think about 19 out of, or sorry, 18 or something out of the last 20 Tuesdays have been up days?
Turnaround Tuesday. Tuesday is, if you look at the statistics for Tuesday over the last, well, throughout this 5-year bull market, actually, it's dubbed Turnaround Tuesday. It's been, the probability of getting an up day on Tuesday has been incredibly high. Yeah, and that we had that last week. We've got a track record of Tuesdays doing that. And yeah, I think that I'd love to get another turnaround Tuesday to get my
1660 or
just
something.
to get my target entry, yeah. And if you look, the thing to watch out for in these charts, hi Graham, and I said we talk about Fibonacci. What actually the selling point last week was the retracement zone. And that was the sell, that point in which we sold there. Didn't mean to do that. The point at which we sold last week was that fib area. So it actually looked quite healthy there. It looks as if we were coming off the 200, ran up. We also had the 50 cutting across the top of it. But it's very, very, you know, these charts tend to be very technical, and that was a nice technical move off the ambush zone. So this time around, that's the latest move. Yeah, so if we get a retracement to a fib sell zone, it could be either this 550 or that 590. And so therefore, if tomorrow is an up day, that's great. What are you seeing, Graham? Your mic is on. Not hearing us? Okay. Okay, let's carry on and just have a quick look at the other markets. What the other markets are doing. Look at that. Nasdaq's having a great day. It's much stronger than the Dow. Much stronger. This is what happens when too many people get bearish and there's too many shorts around. You get these sharp rallies. A lot of people. A nice 50 MA close last Friday. So the buyers, you know, the short sellers got out of the market last week, and the bulls took over last Friday. because that is a sweet move, and we are an hour and 40 minutes off the close. If they hold that today, we could get a move up to 36.60 if they hold that. S&Ps, have a look at the Nikkei. Again, potentially healthier than the Dow. Yeah, let's call the Russell up. I know the Russell has been rough. Hang on 1 second. This is the Russell ETF. Yeah, Russell's got a hammer-like bar here at 109 or 10,900. Got some follow through on Friday's buying, but it's a little feeble. We're coming in contact with the 4-hour 50 EMA, so if that fails, that could roll over. Yeah, let's get the weekly on. Yeah, see, look what we've done. All we've done on this Russell. Do you know what the Russell is, by the way, Nigel?
No, I don't actually. I was about to ask that.
It's is it small caps or mid caps, Graham? Both. Okay. It's the lower end. It's the smaller scale of the indices of the range.
Right.
Just as we have a FTSE 250 and a FTSE 350. Well, this is the US versions of those, really. Only because there's so many thousands of stocks over in the US, they don't they can't use that sort of terminology. But all we've done is massive.
Is that what a 2000 is? Do you think?
Yeah.
It's like
Russell 2000. Yeah. So on the last week was the first time we breached the weekly 50 EMA since November 2012. So that's quite some record. So this is not a market to get heavily short on yet. We are due a correction, but don't need to get heavily short yet. Okay. But if we start to, this is now a major wall, 11,500 in this Russell 2000 ETF. So that's obviously going to be an issue. Getting back up there, that could be the point. So if we get back up another, that's quite a climb, but we could do it. We had divergent RSI up here. So the signs up there, actually more localized resistance is last week's high. So even last week's high is going to be a bit of a struggle, but if we can get up there and fail, then watch out. But if this does, let's put fibs on this. So you can see how we've been just nipping underneath the 76.4. So if we do come up there and roll over, then these levels down here, 50% and so on, are likely to get tested. So after a run like this, 50 EMA is obviously going to be the first one to be tested. Get a bounce. If we then roll over, then we're basically heading for the 200. Yeah, Nasdaq stocks have done very well. So yeah, by the look of this, we are due another good day tomorrow. If we hold up here into the close, we get a pullback to at 200 EMA and then start retesting the monthly pivot as we head into the back of May, at which point we could just roll over. So I'm looking for a short-term bounce and then a rollover. Let's look at commodities. So I'm happy to sit in the pound yen on the long side over for at least a couple of days, and then see if and start to look for that resistance level in the euro yen. At which point I'll look to either lock in profits on the pound yen or take it off, and then start to get short on the euro yen, and then the same with the indices. Wait for them to retest their resistance areas, start to get short. So there's the six. That's where I got the 600 level up there from 580, 560, and then start to get short again on those retest areas. But it's very tempting. Once you see a lot of red, to start thinking that's it. The whole bull run's over. I mean, overall, I think 2014 has been pretty bearish. The biggest moves have been the bear moves, have been the moves to the downside. And you can see once we do drop, we drop fairly fast. So you make more money on the shorts. Hence the reason why I'm interested in making sure I can time a good short entry. Okay, let's start looking at some of the commodities have been very interesting. So let's have a look at some commodities. Yeah, we've got FOMC on this week, haven't we? FOMC is on Wednesday. That's something I've missed actually. Where are we? Yeah, FOMC minutes on Wednesday, so I'd expect Wednesday to be pretty slow. We've got no data. We've got Yellen speaking a couple of hours after the market's open. No data just before the market's open. Then FOMC 2 hours before they shut. So if we start to bump into that area as we get into FOMC, that could be very interesting. Commodities. Oil has been flapping around doing not a lot, unless you were lucky enough to get in quite low down. See, what was it? 102.50 and 105 has been a major wall. We don't. I think we could. Well, we are struggling here. We had a nice move up on the 3rd of May, and you can see once you get a nice move up, the markets just take time to digest. So we could see a repeat of this, where we get a big push to the upside, and we consolidate for, what was that? That was the 7th of Feb was the big push. Then we didn't break out again until the 18th of Feb, 11 days later. So 1.5 weeks later. So we could struggle around here for, I don't know, another 3 to 5 days, another 3 to 5 trading days, unless of course we close up here, they buy the pullback, and then we run. With something like that, you just got to either stay in it with your stop well out of sight, or just buy some pivot pullbacks. 200 was the only pivot you could have bought today because it's just not moved that much. At the moment we're only 215, so that's not going to get you very far. But on Friday, Let me see. Yeah, that little red bar was the Sunday open. So Friday was a bit of a stopping bar, and today looks as if we're going to get that higher close. The close, like actually the pits have just shut. So assuming we don't see any major change between now and the Dow closing, that is a really strong bullish engulfing bar. So if we see 101.70 or just 102, oh shit, let me just get rid of this. Hang on. Yeah, so this is a good pit close. So I'm moving to 101.80. Could be enough to see that get into 103. I think 103 is the next obvious place to get to, hitting all that congestion. The beans have been really difficult to swing trade, really difficult. It looked really bullish up to 15.20 and dropped right to 14.40, and now we're in this box. So I've just steered clear. I got stopped out of the beans for a small profit last week, and I've just steered clear of them. And the same for the wheat. And the pits are closed on the wheat as well, or the grains in general. So that's quite a deep swoop. I suspect that will. That looks as if that is capable of coming up. The dollar's definitely weak, and the corn. If you want to get in the grains, I think the corn's the better one to get into. It's a nice, neat 475, 477. If you stand aside, wait and see if we get a close above 475 or 480 tomorrow, and then buy a pullback. Otherwise, we could just drop under that and come down to S3. Sugar, not much going on. Cocoa, not bad. Gold, I just stayed out of this gold market. I just don't trust this gold market at the moment. I took a long the other week and got stopped out fairly quickly afterwards and just left it. I still think gold wants to come down to about something between 12.50 and 12.75. And the back end of June tends to be a good time to buy gold. That might be a good area. 12.68, 12.70. So I think the markets are. I'm not expecting the markets to crash. I'm just expecting the markets to have a decent correction. Maybe we don't. If these markets hold up into this week, that bodes well for the summer. So I think this week's crucial for the coming back to the indices a second. Let me just take a sip of drink, so my throat's getting dry. I think this week's crucial for the indices. At the moment, we're just doing a classic bounce off the 50 EMA. So after you get 50 EMA breaks, it's typical to get 50 EMA test. But close. If we're still holding 600, 700 into the back end of this week, then we're going to see 1700 soon. But otherwise, that is toast. Okay, 50 EMA does a good enough job at marking those lows, so I'll leave that. Let's just move on to some stocks now. It's 7:35. Let's move on to some stocks. I'll tell you what I'm looking at quickly, and then we'll look at Graham mentioned Netflix. Let me just grab Netflix. Wow, this has had a decent push. Very good push. There's a nice bottoming pattern there. The bottoming pattern here, and they just gap it. We had a bottoming pattern here. They pretty much charge it up. Bottoming pattern here. This is for once, this is a much sweeter move on Netflix. But I would consider getting short up here. Obviously, I'm going to keep an eye on the indices, but if the Nasdaq, if these indices are going to hit higher levels, and this is the area I want to get short up here. But at the moment, that's pretty impressive. I'm going to close up here in an hour and a half. That's very impressive on Netflix. Would I buy a pullback here into the rest of the week? No. What about you guys? Would you think that's a buy? Assuming we close like that, that's a potential nice move. We're just butting into the top of that trend line. And Tesla is doing well. I'm just looking for these to retrace. Similar to my attitude towards the indices, I'm just looking for these to retrace and then catch the next leg down. You can see you've got incredibly overbought up there. So if you put the fibs on the weekly, yeah, so once we sold off, we retraced to this zone again, which I talked about. This zone's really important. This is the best use of fibs. Once you've got a range like that, it's this zone here where the best shorts are if it is coming off. So it came right the way down to 61.8, and it could not hold that 76.4. And then we just wound our way down. All these highs were sold until we started getting down to a decent support level. So if we hit this level here on Tesla, that is a potential next area to get short to see if we can wind our way down. Let's look at Amazon, because Amazon's been the market's really fallen out of love with Amazon. Yeah, see, this is relative weakness. So the Nasdaq's having a great time, and the Amazon is just staying down here. So any move into, let's put the fibs on this move. I would look to get short Amazon on any move up to this level here. And the fact it can't budge on a day like today, where Nasdaq isn't doing okay or doing well even, that is relative weakness. Right, what stocks are you, Graham? Are you looking at any stocks? I'm still short Philip Morris. Sorry, Philip Morris is getting a bit of a push up. I found some support in the weekly 85. I got in just at that pullback at 86.25. So I've got a little bit of a buffer here, but that is definitely finding support at the moment, so I need to be careful. I was looking for a short in dear. I didn't take one. General Motors had a hard time. Where's General Motors here? Um, so with General Motors, I would look to get short. Let me think. The obvious place seems there. At the moment, it may be that I'd be lucky to get short up there. And ultimately, I would look for this to go and kiss that and then start retracing to 29. Who knows, if it really gets nasty, that could come down to 25 at 161 extension. So it's telling that stocks like dry ships, a good transport company, is not holding up. I was interested in ISRG. That's getting very sloppy. I think this is, to me, this is high frequency trading. It's very blocky, very manipulated looking chart to me. Boxed for a long time, but they run it up here and it gets really ragged and all over the shop before they gap it down again. So I've just decided just to step away from that one. That's too gappy. Is your microphone not working? Let's just zip through what I've got. Wow, I'm seeing a lot of bounces in stocks that had a fair amount of selling last week. That's Ryder. It's too messy up there. It's ebbing and flowing too much, not trending enough for me. FCX. Again, it's become very scrappy this over the last 2-3 months. Amazon we talked about. Taser. I would be interested in shorting that one. At one of these levels, either 15 or 1650. Okay, I need to do a separate scan. I would be interested in looking at some high RSI stocks in areas like retail. In fact, let's have a look at some of the sector performances anyway. So last week, industrial goods and financial services got hit heavily. Healthcare's had a good run over the last month. You see the safer havens are at the top of today's charts. Utilities and conglomerates. So they're safer stocks. So the riskier services and financial services is, well, certainly we're in the beginning part of the week, so you can't tell too much from that. But yeah, a lot of safer stocks at the top of the tree there. So, I mean, going by that, let me see. So, healthcare's streaks ahead. Healthcare and utilities are really had a good 6 months out there. And just over the last month, conglomerates have really come up. So I'm looking for vulnerable stocks. I'm looking for some of these momentum Nasdaq stocks to climb back up, and anything to do with the consumer and retail, I would look to get short. And some of these toppy social media stocks, if they come under that classification of Nasdaq stocks, I'm interested in getting short. Under Armour. Not bad. Okay, I'm going to leave it there. I'm just going to do a separate stock scan tomorrow and see where we are with that. Any other questions before we finish? We'll keep it nice and short tonight.